Right now, we've got Sreesankar with us. He is going to take us through what is really happening. Head Institutional Equities, Prabhudas, Lilladher. Mr. Sreesankar, thanks so much for being with us here on NDTV Profit. What are you getting? Are you getting any sense of the direction of the markets after looking at today's trade, or is it still a wait and watch, uncertainty, bit of profit booking that's happening?
See, markets have gone to a new high, and it is a territory which is probably it's going to try to find a direction from here on. As long as the global cues also are on your side, the markets will continue to remain with a positive bias. But we should not forget that at a new high, you're bound to see certain element of profit booking, and at the same time, you will also see huge amount of volatility coming into some of the stocks, and the stocks movements can be very, very sharp with lower volumes as well.
Okay, let me pick up some specific counters and talk about MRF for starters. That counter is up significantly. We could just pull up MRF and see how that counter is doing today. Okay, so 7.5% gains for MRF there. What's your view really on this stock?
We don't cover the stock.
You don't cover the stock. Okay. What about ONGC? Again, some positive news coming in, and the government looking at reworking the subsidy sharing formula in a way that even upstream companies like ONGC get some benefit there. Do you see that as a huge positive? Look at the way the stock has spiked after that news came out, the minister making a statement that they're looking at reworking the subsidy sharing formula.
Till the time you see a clear-cut guideline coming on, or a direction coming in terms of the subsidy sharing or even under recoveries, etc., these stocks will tend to be trading oriented stocks in most of the portfolios. I do not think that it will become an integral part of the holdings over a longer period of time unless the guidelines are very clear in terms of subsidy sharing or any of these companies, because there is an element of uncertainty, and you really do not know till the last moment what is the kind of subsidies these companies will have to dole out and things like that, or that they will have to share with other companies, and they to forecast an earnings for these companies will become extremely difficult at that point of time.
Okay, I have to talk to you also about the auto pack. BSE Auto today up nearly 1%, but it's also specific counters that have been in the news. A number of brokerages, they're talking about these counters. So let's start first with Tata Motors. We've got TVS Motors also there. Let's start first with Tata Motors and get a view from you, Sreesankar, on Tata Motors. A lot of news coming in with regard to JLR.
Sorry?
If you could talk to me about Tata Motors, your view on that counter. It's down today.
No, clearly from a, see, you can't comment on why it is down today. So there is a clear-cut view, and if the commercial vehicle growth is going to be stronger, the entire industry will continue to do well. But what we want to bear in mind is that Tata Motors is not a stock which is going to be dependent upon the commercial vehicles growth in India. A significant amount of their profitability and it's going to come from the global performance of JLR, and it will continue to remain at that stage. But I can't comment on why it is down today and a view based on that.
No, sure, fair enough. You're not saying why it's down today. I'm obviously asking for a short-term and long-term view, particularly on that counter. Let me go across to my colleague Pankaj Podar, who will take us through some of the news with regard to JLR. Pankaj, go ahead.
Shweta, there are two pieces of news that I want to focus on. The first one is regarding the US numbers and how they have done, and second is a pay hike that they have given to their laborers. So the first one is US sales numbers, slightly on the weaker side. They were expected to be weak, but they have been weaker than what was expected. 19% decline for the November 14 retail sales for the US market only. Jaguar was down 13, Land Rover was down 21. Volume declines for all the model except Jaguar F-Type. This sale is also impacted due to the production constraint, but that is something that has been going on as largely as far as JLR is concerned, we compare it to some of the other luxury automakers. So you don't get a clear trend. We spoke about JLR, it was -19. BMW is about 2% decline. Mercedes is 2% gain. Audi is about 22% higher. So clearly, you don't get any sort of trend that we can make out of these four numbers that have been reported. The next one is in terms of news flow is that JLR has closed a pay deal with their union for a plant in UK. The quantum of pay hike is broadly in line. Pay hike is about 4.5% in the first year, plus a bonus per employee. In the second year, it's about 3% hike or the retail inflation, whichever is higher. However, this entire pay hike implies about 1.5% of the 2015 employee cost. Overall, two news coming in slightly weak in terms of largely in weak as far as the US sales numbers are concerned, and in line as far as the quantum of pay hike is concerned. Sreesankar, what is the sense that you get in Tata Motors DVR? Of late, it has been outperforming Tata Motors. Do you cover Tata Motors DVR? Any view on that?
See, it's DVR, the only voting right differential is there. So sometimes you see that kind of a discount which will be high, and if the discounts are pretty high, that at some point of time that is going to narrow down, and that huge discount is probably not justified. That's the reason why people buy into that DVRs as well. And I would think that a similar thing is happening around, because when the discounts have gone too wide, people are finding value in that and they are buying into it.
Right. This production disruption issues which have been impacting their certain regions. Do you think that's a big concern for Tata Motors? Do you think that, probably once it's behind us, the valuations can increase from here on? Because I think after the recent run-up, it's one of the cheapest large cap auto stock.
See, we need to bear in mind that if you look at the entire commercial vehicle space which has been out here, the kind of performance of the commercial vehicle space has not been up to expectations of a lot of people or analysts around, or the numbers has been not too positive the way two-wheelers have been, etc. Now, if you start seeing a sharp increase in kind of a demand or a growth which will happen in Q4, and now how the entire supply chain is going to gear up to it is something one needs to wait and see. And you can't immediately say that it's a supply disruptions. And I would think that the entire supply chain must be geared up to take up that demand or the production schedule. That's what our thought is.
All right, stay with us as we first get you some more news with regard to TVS and Eicher. Let's look at those counters also. Eicher Motors up 5%, more than 5% in trade today. TVS Motors also up 6%. We've obviously got Goldman with a view there on both TVS and Eicher. Pankaj, could you take us through those details?
Well, Shweta, it's the Goldman push that we can say for both of these counter. Let's start with TVS first. Goldman has reinitiated or resumed the coverage with a buy rating. Their target price is 345 per share. Expect a 46% potential upside is what they are saying. Of course, this does not include the move that you are seeing on your screen. TVS to benefit from a strong scooter sales segment and relaunch of Victor, which is in the other segment, would be the key trigger. How does that do, and what is the response that it gets from the consumers? Would like to point out one thing. Hero has margins close to 12%, Bajaj has margins close to about 19%, and TVS margins are in the range of 6 to 7%. The main call that Goldman is taking is that this margins would rise in the double digits by about FY18, and that will continue the re-rating as far as TVS Motors is concerned. So that's their main call coming in. Eicher is up 6%. I believe it's at a life high today. They have resumed the coverage with a buy rating. Again, Goldman. Their target price is 19,235. That implies a 34% upside. Royal Enfield is in a sweet spot. Demand and revenues would go up significantly for Royal Enfield. Sales volume by 2019 can be as high as about 1 million. Plus the CV demand recovery, if that comes in, it can be a bonus, and the successful launch of personal vehicle where they are investing about 130 odd crores would be the next key trigger on the upside. But Royal Enfield continues to be strong. They believe it will continue to be strong till 2019, can touch the volume mark of 1 million for the entire year that year. So that is something, that is largely a call. Royal Enfield, and how does it grow in the next 4 or 5 years?
Okay, Pankaj, do stay with us. We'll come back to the entire auto space. But before that, let me go across to Sreesankar and get his view on these two counters. Eicher Motors as well as TVS. Your take, would you put a buy at these levels for them?
We don't cover those two companies.
Both the companies, you don't? But any broad outlook that you have on the two-wheeler space?
Two-wheeler space, we have an outlook. We continue to remain optimistic on that demand environment, and that demand continues to grow at this time. Because what we have seen is after the first quarter, the demand has slowed down a bit, but we continue to believe that that 10% growth is something which is, especially in the motorcycle space, which will continue to be there.
Okay, so Hero Motorcorp today down about 1.24%. Bajaj Auto, that counter also under pressure on account of those weak numbers that were reported, weak sales numbers that were reported yesterday. But let's stay with the auto space and get in a view that's also come in on Maruti as well as M&M. Pankaj, take us through the details.
Yeah, you know, Merrill Lynch has increased their target price for Maruti, maintained by target price 3750. They have raised their forecast for FY16 and 17 by about 5% currency tailwind, which they are talking about the yen movement and how the yen would move going ahead. That is something which is in their favor, and that they believe will continue to increase their margins. There is a fear that they may lose the dominant market share that they have, or it may come out. They may still be dominant, but it may come down. But what Merrill Lynch says is that they don't believe that the market share would come down. In fact, they are of the view that there can be an upside risk once the new product launches start in the next year. So they would be eyeing out for market share to increase, but they don't expect that the market share would go down. The stock has been up since morning, up 1 to 1.2 odd percent for Maruti Limited. M&M is the next one I want to focus on. CLSA visited one of their recent new plants. After that, they came out positive, meeting the management as well as looking at the plant. They maintained their buy. Their target price is 1,550 rupees. They await the launch of the new SUV as well as the new LCVs that they have. Yes, the tractor demand has been an issue. The November numbers were slightly on the weaker side because of the tractor sales slowing down. But they have a lot of launches coming up in FY16, and that is the key to watch. Because this time around, CLSA is saying that the company has increased its focus on the entire R&D space in the recent years, and that is something which gives them confidence that the new products will be able to drive growth. After the recent underperformance to the entire auto sector in the last 4-5 months, risk reward ratio is now favorable. They have a buy with a target price of 1,550.
All right, Pankaj, stay with us. Let me ask Sreesankar if he tracks any of these two counters, or you'd like to give a general view on the auto space.
Hello?
Yeah, Mr. Sreesankar, do you track these two counters? Maruti and M&M?
Which one? Mahindra?
That's right.
Yes,
M&M and Maruti.
We do cover. Yeah. See, in general, Maruti, we continue to be bullish on the commercial, the passenger vehicle space. We'll continue to see the demand, and especially on the new launches, etc. We'll continue to see the demand improving in Maruti. We continue to remain bullish on that stock. Mahindra, while we have an accumulate, we still believe that it's going to be more of a market performer from that side.
Okay, great. Let me now get your overall view on where the markets are headed. How are we going to close this calendar year particularly? We've been getting a number of targets. Many believe that 8,800 on the Nifty, 30,000 on the Sensex is looking doable by the end of this month, which is the end of the calendar year. Would you share that view, or do you have different figures in mind?
We, in our topics reported in the month of November, have come out with our target, which is anything between 7,600 to 8,600 range. We are at that 8,600 range. We need to revisit the entire estimates that we have for the next calendar and take it forward from there. Our belief is that should the domestic economy improve and continue to grow, your earnings growth momentum for next year might be much faster. And to put it in perspective, we believe that for FY16, the market today is trading at closer to 15.6x, which if I look at from a 10-year average of a 1-year forward multiple, which is at around 15x. So I think from a bullish scenario, the potential for that 15.6x to move up is very, very high, which will invariably tell you that the market for FY15 or December, sorry, not FY15, FY16, so December 2015 will be much above the numbers that we speak about right now.
Okay, in terms of triggers that markets will be watching out for, or you're keeping an eye on, the big event of the RBI credit policy is over yesterday. That news got digested on expected lines, no rate cut, and yet an assurance that there could be a rate cut early next year. In terms of domestic triggers, are the markets waiting for something, some hope coming in from the winter session of Parliament if the insurance bill goes through?
There is a large number of things. Number one is insurance bill, how that gets treated, whether the insurance bill will get cleared. The second one is the policy implementation of various measures the government has taken, be it in terms of the coal mining, especially in the mining sector. Should that mining sector get sorted out, and I'm sure in the commercial vehicle segment you should see a huge improvement and an increase in demand which should happen. That's the second side. Third is once the domestic economy starts to improve, your GDP numbers, if your estimate is anything between 5.3 to 5.6 for the current year, should see a quantum jump to 6% plus for FY16. And fourth is how the entire inflation now is going to get addressed. If you see the commodity prices remain subdued because the global growth has slowed down, then you actually will have a large amount of input costs probably not increasing quite dramatically, and there is room for a cut in the rates which will be there, which will also be taken as an extremely positive by the market. So that liquidity improvement, lower interest rates, plus a growth should actually see in an expansion of the market multiples, which should take your market to a new high.
Okay, superb. In terms of the more immediate nature, next few sessions that we're looking at, how are you seeing these levels panning out? Is it a cautious market right now?
It's very difficult to call a few sessions when you are a fundamental analyst looking at a longer term things. Few sessions can, the volatility can increase due to large number of global factors or even domestic factors where knee-jerk reactions can happen. Okay. So I would rather desist from giving a very short term view on the market.
Let's look at a medium term at least, which you've been talking about. You've mentioned a number of domestic factors. Globally, what are you closely watching? What is it that the equity markets would globally watch out for? Any upside, downside risks that we can expect?
Well, in the domestic economy, how the domestic economy is going to develop is the industrial numbers going to be on the higher side.
I mean globally, what are the factors we are watching out for? Globally, we've talked domestic, of course, you mentioned a number of factors, but on a global front, what are some of the important trigger points that Indian equity markets will be watching out for?
I think everything is going right for the Indian equity markets right now. So if the global side, if the crude suddenly moves up and goes up quite dramatically, then you have a problem in the domestic market. So these are all the factors that Indian equity markets will definitely look, not only India, but also the global markets. Second will be risk premium. If the money that has been flowing into equity markets, the risk premium and the equity market increases, then you are certain to see a reversal of the flows. So you've seen from the marketplace that even if $1 billion worth of an outflow happens in this market, how much the market can correct. So these are all some of the points that one needs to be aware of when he's looking into this market right now.
All right, Mr. Sreesankar, let me also ask you sectors that you continue to be bullish on, and if you'd like to mention specific stocks within those sectors that you are bullish on.
We continue to be optimistic on financial services and automobiles. We like IT, and that has been part of our topics in the month of November. And that we still continue to have that set of topics right now, till the time we change it for the month of December.
All right, Sreesankar, many thanks for joining us and sharing your views and giving a broader outlook on the markets and what we can expect going forward. Thanks so much for your views. We slip into a quick break. On the other side, a very special segment, Rebooting India, where we talk the entire oil economics with former chairman of IOC.
Also on. So I would think